Hello, my name is Guy. I bought for you an electronic board. And there we go. I'm going to talk about working capital requirement that is fixed to the company and a working capital requirement that is fluctuating. And how do you have to put it on the manageable balance sheet? You have to do it like this. You take your fixed assets, then you put your working capital requirement that is fixed to the company on your asset side of your manageable balance sheet, and then your liquidity, and then your working capital requirement that is fluctuating. On the other side, of course, you have your equity, your long-term and your short-term interest-bearing debt. And as you see here, fixed assets and working capital requirement, they are smaller in amount than the equity and the long-term financing. You know that this is called the net treasury or the excess of cash. So this is all net treasury. Now this is the 31st of December, and for example it's a company selling first, and at the 30th of April, end of April, what do you have then? You have no working capital requirement that is fluctuating anymore into the company because everything has been sold during winter, and this is the normal balance sheet of that company. And what do you see? You still see that the net treasury is of course the same amount here as you had in the previous balance sheet. What happens if you would put the working capital requirement that is variable together with the fixed working capital requirement? Then you see you have still the same amount of fixed assets, but if you put here the total working capital requirement and you put your liquidity downstairs, you see that you don't have any net treasury anymore. Your net treasury has been hidden because you have put your variable working capital requirement on the balance sheet of the end of December together with the working capital requirement that is fixed. And that is of course the reason why you have to put the working capital requirement that is fluctuating downstairs the manageable balance sheet. I thank you.